How's it going? I completely messed up my my screen when I was setting up. I forgot my webcam at my office, but that's okay because we're here and we have my MacBook camera, which is fine. It's sufficient for what we're doing today because today we are talking about bookkeeping, which is absolutely what we all want to be talking about during the holiday season, right? Like, holiday season? Tax season? Am I getting confused here? No, I'm not, because honestly, if you want to make post-holiday season significantly less stressful, it's a great idea to just set aside a little bit of time each week, and I'm talking like a half hour, an hour, to get your book straight before the end of the year. That way also, like, if there's any issues, you can always get in contact with an accountant now versus when they're crazy overwhelmed during their high season in, February, March, and April. So, Craft Cat is gracing us. Gregory just strolled in. Bob is right behind me, hanging out in his chair. And yeah, so I'm Kristen M. Roach. This is Craft Leftovers Live. Thanks for joining me today. Thanks for, listening to what I have to say about running a creative biz. If you haven't met me before, haven't read about what I'm about, I'm a published author. I wrote my book, Mend It Better, 10 years ago with Story Publishing. I've been kind of doing this ongoing series, a little bit initiated by the fact that it was the 10-year anniversary, and I thought, like, oh, shoot, I do have 10 years of, like, industry experience. Well, more than that, because there was a bit before the book got published. And it's given me a great chance to just, like, have some really good conversations with some of the contributors to my book, as well as just reflecting on, like, the things I've learned, as cheesy as it is, the things I wish I would have known when I started out. And I gotta say, bookkeeping is one of them. I was really fortunate that early on I had some great advice. And so I want to return the favor and try to give you some great advice early on as well. Or maybe later on when you're still struggling with it and you just need to fix this problem so you don't have to worry about it anymore. Let's see, I spent so much time prepping for the bookkeeping topic. I completely forgot to prep my intro. So, little helter-skelter. What am I forgetting to say? Like, subscribe if you want to keep getting updates. Leave a comment. And absolutely ask your questions today. Just pop on over to that live chat and it'll show up on the side of my screen here and I'll try to answer you as I'm going along. Otherwise, just listen in, and if you're catching this as a replay, feel free to leave the comments. I actually read them all and I'll reply if it's something that's not just spam or troll. And you can catch all the episodes that are in this series over on craftleftovers.com at craftleftovers.com/podcast. And I think that's it. We're just going to say that's it. There's more, whatever. It doesn't matter. We're talking about bookkeeping. Now, I did decide I really miss crafting with you all, even though I know it makes me a little distracted. So I thought what I would do is I'd split it a little bit and I'd at least show you what I'm working on. I swear there's been crafting going on. So first couple minutes here, I'm just going to give you project updates, right? I feel like in a board meeting, it'd be just your standard business. So first of all, I want to show you what I'm mending. This is crazy. So Lucy's hat that she loves. This is actually the second hat she's gotten like this because she just loves them so much. She beat the other one to heck. She wore it every single day for 3 years straight. So we got her this new hat. As you can see, it's white and it's still white. That is showing how new it is. These are still fluffy. It's not even gone through the wash once yet. And the top completely opened up and unraveled. I have it on a circular needle because I didn't want it to unravel any further. So what happened is, in commercial knitting, sometimes what they'll do to end it is they will just sew the end. They won't bind off. They'll just sew it. And so if that stitched line gets snapped, snagged, pulled out, loose, whatever, the whole thing just bleh. She was like, Mom, was on the playground and I just picked up my hat, I swear. And it just unraveled in her hand. Good thing it wasn't a cold day. So what I'm actually going to have to do for this is first, it's like the most epic dropped stitch situation. So I had to go through, pick up all the dropped stitches, and I'm going to have to re-knit. But the tricky thing about this is I actually have to re-knit all the decreases, and I have no idea what the decreases were, so it's really kind of best guess. Thankfully, it's past this little, like, kind of simple cabled stitch, so I think I can do it. So that's kind of what's on in my mending basket right now. And then I am knitting yet again. This is the like top down perfect sock, and it's perfect for my foot. So I don't know if it's going to be perfect for your foot. I tried to rework the sizing chart so it'd be good for larger feet than mine or smaller feet than mine. I just know with this, I have to cast on 56 stitches and kind of just go. It starts out with a 1x1 rib, moves to a 3x1 rib, and then, you know, turn the heel with a slip stitch heel flat, and then you just decrease it down. I have a really kind of like big arch, I guess, wide feet, I don't know. So what I do to accommodate that is I don't do ribbing on the top of the foot, and I just leave it stockinette stitch. It is so simple, and it's like I don't even have to think about the pattern anymore. Anyway, you can get that pattern over on Ravelry if you're curious. You know, it's over there. I think maybe on Etsy too. I don't know. We'll see. Okay, so then, this is exciting. Oh, hey, Gregory. I'm working on a new pattern. This is like so exciting. It's been such a long time since I've written a knitting pattern. And it kind of started the same way all my other patterns have started out, where I'm like, I'm going to knit something new. And so I look at all the patterns out there, and they're all beautiful, and they're so gorgeous. So I'm like, oh, that's nice, but I wanted a little bit more of this. Or, oh, that's nice, but I wanted a little bit more of that. Oh, that one's so beautiful, but I don't want something so complex. I want an easy knit. So then I kind of determined I want to cast on 100 stitches and kind of just go with it. So I'm taking notes. I'll post it on Craft Leftovers when it's done. I'm knitting it with this gorgeous yarn, which is like a, I don't think this company even exists anymore. But it's a silk merino blend. I love it. And I'm going to knit it into a big wrap. That can also kind of be like an oversized scarf or hood or whatever I want it to be. Hey, Gregory. He's pretty great. He actually doesn't chew on my yarn, which I'm thankful for, because that, my other cat, Molly, she absolutely did that. Here, okay, move. All right, so then the other exciting project I've got going on, okay, is I'm going to totally mess up my camera situation again, so, but we're just going to like, oh, look at that. It is a 1960s, maybe 1950s singer. I did a little tiny post about this over on Instagram. It's in a built-in cabinet. It's gorgeous. I honestly bought it for the cabinet because I'd been looking for a sewing machine cabinet for a super long time. Sorry if you can hear Gregory purring. Maybe you like that. I don't know. But anyway, I bought it just for the cabinet, and I was like, I can at least fit my, you know, just whatever brother sewing machine in there. It'll be fine. I can like kind of retrofit it, mod it a little bit to do that, because it's a real simple mechanism where it's just a real simple mechanism. And so I stick it in the garage, and I'm like, oh yeah, this is the to-do later after the migration tapestry is installed at the library. And so we finally get the migration exhibit done, which like feels so good. And this was kind of my treat project. Like, once that's done, I get to go spend some time on this thing that's just purely for fun. So, sorry. Jason brings this down to the basement for me because it weighs like a ton because it's a solid chunk of cast iron. And I plug it in, and it works. What the heck? So not perfect, needs a tune-up, but it works. Like the motor's just fine. Even the light bulb worked. That really surprised me that it wasn't burnt out. So plugged that in, looked at it. I'm like, oh, this is great. And then I kind of just like let myself go with it, which is so fun when that happens, when you're like, I'm just going to plug this in. And then you're like, yay, project, I'm having fun. Then something even better happens. So like I'm starting to take the screws out and clean it out and making a mess and whatever in my studio. And Lucy comes down to ask me a question about something we don't even remember what. And she's like, what you doing, Mom? And I'm like, I'm fixing this thing. And she's like, you're fixing it? And I'm like, yeah. So then we start working on it together. And it was wonderful because she's 9 now. And so like when she helps, she's actually helping. So she like was going to get me rags and she's like wiping stuff down for me. It was so much fun. And then Jason got in on it too. He was bringing me like lubricant for the belts and stuff, or not the belts, but for the gears and things, and turned into like a whole family project repair thing. It was a lot of fun. It was very rewarding. And in the end, we fired it up and we actually sewed something. Lucy designed a little skirt for her stuffed animal and she just like went for it. Okay, so that was like last project update. And thanks for letting me share. Thanks for listening to my like project joy. It's been a little while since I've been able to just like free range in craft and art. Like I've been so focused on this exhibit. It's left like zero time for any other projects. And yeah, so it's really just kind of fun to indulge in that for a little bit. Thanks for listening. Okay, anyway, bookkeeping for your creative business. Now, this is going to apply, I'm just going to jump right into it. This is going to apply whether you are an artist doing commissions and gallery work. It's also going to apply if you have a product-based business, like you're selling, like tea, right? Like it's a creative project. Like I'm making a thing and then selling it. Or if you're a craft pattern writer, right? And you're selling craft patterns online. Now me, I do all those things. A little bit about my business structure first. Wait, I actually did, this is the part I outlined, so I'm going to check in on that so I don't forget something important. Okay, so about my businesses a little bit. So Little Woods is an LLC, and there's some nuance there because Jason and I file jointly as a married couple. So it's considered a single entity LLC, but it's also considered a partnership. So there's like some weird tax things there. There's some weird bookkeeping things there. But then there's Kristen M. Roach, and that is a single entity LLC that is also that is taxed as a pass-through, like sole proprietorship, essentially. It initially was a sole proprietorship, and a sole proprietorship is where you're not a business entity, you are an individual who is getting additional income, and you're just filing like it's called a Schedule C is what you would file. Maybe some 1099 miscellaneouses for if you're doing freelance work as well. Anyway, so I keep the books different, and I keep them separately. Like they are very separate. So like Little Woods is a partnership with another person. Even though it's considered like a single entity, it's still like there's still partnership things happening. And then like Kristen M. Roach, which is what my art business and Craft Leftovers is under, that is a single entity LLC. And so that's like, I'm the only person involved. I don't have payroll. That's another huge difference. So they're very different styles of keeping my books. Now, why keep records at all? Like, so say we're primarily going to focus on the sole prop / single entity LLC style of bookkeeping that's cash based, which I'm going to explain in just a second here. And with that, I know a lot of you. I know it. You guys totally have like the box of receipts thing going on, and maybe it's like a virtual box, but I know you're maybe doing all your bookkeeping at the end of the year after the first of the year. And and it's working, right? Like, have you had an audit? Probably not. You're probably just fine. So like, what's the point of doing it at all throughout the year? Like, what's the point of keeping an eye on your books as when you're a single entity? Like when you're a partnership, when you're like an S corp or a C corp, and you have like a board of directors, or even like as a nonprofit, you're reporting to someone else on a regular basis. So that's a great reason to keep your books up, right? Because you need to show financial statements on a regular basis to show what's going on in the business. So that's pretty obvious. Like, yeah, of course. But as a sole proprietorship, as a single entity LLC, like, what's the point? Like, why the extra work? Like, honestly, for years, I've definitely done the, virtual box of receipts. So there's a couple reasons. One, you will save money. That's like the biggest one. You will save money. And there's two ways, well, there's probably more than two ways. There's a couple ways that plays out. One way is you'll catch banking errors regularly. So like if you're keeping track of what you're spending, what you're receiving, anytime there's a fee that you shouldn't get, a double charge, someone hasn't paid their invoice, like that kind of thing, you'll be more aware of it sooner so you can actually fix it. For instance, like I don't know how many times I have forgotten to cancel a subscription to a service. Like I signed up for I can't even remember the name of it. It was like an e-course service, and I really just didn't like it. It didn't jive with the style. This was for Little Woods. I forgot to cancel the subscription, and it cost us $30 a month until I canceled it. And then I had to go through the process of being like, you can see I didn't actually use it. I didn't intend to keep the free trial, and like kind of clawing back the money, which then creates a lot of work. And then sometimes they're just like, yeah, too bad you didn't cancel in time. Like, tough luck, deal with it, which stinks. And thankfully that was not how this company reacted. But it just created a lot of extra work and stress for me where it didn't need to be if I hadn't have gotten behind in my like monthly bookkeeping, because I would have noticed that charge coming through. So that's one way it can save you money. The other way it can save you money is kind of on the opposite end, where like say you have an outstanding invoice to somebody and they've got, maybe it was due on receipt, maybe it was due in 30 days and they are overdue. A lot of times it's just because they've forgotten to pay you. It's not like they're being delinquent or a jerk, or they're trying to cheat you or something like that. A lot of times they just are busy like you are and they just forgot. I don't know how many times I've done that to people, and I'm always grateful when they send me a reminder. So like you can send out those reminders on a regular basis too and almost consider that part of your monthly check-in. The other reason is to kind of keep down that spending. It's not exactly the same as accounting or like errors or forgetting to cancel a subscription. When you keep an eye on your books, you keep an eye on your spending, and you start to realize like, if you're running your creative business as a business, you got to keep your eye on your profit margins. And so like that monthly check-in can really help you keep an eye on like, was that really a business expense, or was that just like a personal indulgence that I'm running through my business to try to write it off? And, a certain percentage of things, I know everybody does it, that's fine. But if you're doing that to the point where you're then not showing a profit in your business and you're not paying yourself a reasonable wage because you're just taking it out all the time as these like kind of owner's draws versus an actual paycheck, that will trigger an audit eventually or declassify your business as a hobby. So, there's a bit of that. There's also like identifying places of like where you're making a lot of income. Like, holy crap, I sold 30 cat hoodie patterns in the month of February. Why? What happened? Did somebody post about it? And then I can track it down and then I can like thank them, and that's, you know, that's good. So that's one of the reasons. The other reason is because a lot of times as a creative business owner, you're going to be making investments in your business by just paying things on your own dime. Like, say you want a new sewing machine, for instance. Like, ISU surplus, right? Like $50. It's not a lot of money. It technically is a business expense because I'm going to be using it to write patterns for you all, which I'm super excited about. It's also a bit of, can my business really afford this right now? Probably not. Am I okay? Like, I just want it personally, so I'm going to buy it for the business. And it is a legitimate business expense. So it's not even like I'm being, I'm shifting things around or doing anything nefarious. It's more like, okay, I'm going to make this investment in this business that I want a light industrial sewing machine. I want to be able to post about repairing this machine. I have all this content planned out centered around this project. Can my business really afford this right now? I mean, maybe. I don't know. But I paid for it with my own personal cash. And that is equity. And these are the things that don't get tracked in your books if you're not keeping up on a regular basis. Or unless maybe you are excellent about putting all those receipts in that box and keeping it all in the same place. And then at the end of the year, entering them all. I'm not so good at that. So what I do is I do have a file, but then I go through that file, and it's kind of like a 2-process file. I go through that once a month, and I enter all those kinds of like purchases that came through my own personal funds to make business purchases. I enter all those as equity. And equity is basically like investments you've made in the business, like cash investments you've made in the business. So like in the way that plays out in Little Woods. So Little Woods, sometimes we need to purchase something that the business legitimately cannot afford. So like we really wanted to get a new air filtration system for the back for our staff, for me, for respiratory health reasons, for like when we're blending and packaging. And it's not like a cost of good. It's an investment. It's an asset. It's a thing we're buying for the business. And we decided it was important enough that we wanted to personally just invest in the business and purchase that for the best business because it was good for it, And we'll recoup that money over time. But the benefit of this is that depending on what you're purchasing, it will increase the valuation of your business through inventory or through assets, through like equipment, inventory, and all that kind of stuff. It'll also decrease, like if it's like a purchase of something, like, so sometimes, like for instance, we're buying something ridiculous like 1,500 tea infusers, which like Little Woods just doesn't quite have enough money saved up for that like one-time annual purchase. So we're gonna pay for that out of our own savings account, enter it as equity, and then it kind of comes off our taxes at the end of the year. It lowers our tax threshold at the end of the year. So there can be some tax benefits to entering those equity things as you go along. Bob was making some noise back there. Anyway, I'm kind of getting into the weeds on this. Let's bring it back. We're going to go back to the bit. I started talking assets and inventory and fixtures and equipment and all this jazz. Main point, you can save money, you can make more money. And it can feel really good. Like doing bookkeeping and checking in on it on a regular basis can feel super satisfying because you can see the progress you're making. So do it. Now, back to the basics. Cash versus accrual accounting. You may or may not have heard of this. There's some great articles about this and the differences over on freshbooks.com, which I'll go ahead and link to. They are not a sponsor of this. I legit just did some Google searching around and I found them and I'm like, this is good information. I'm going to share it. And it's way more articulate than I could ever be. So if you really want to dig into like accrual versus cash accounting, go read that. It's way thorough. To sum up, the way I understand it is cash accounting is when you get paid, that's when you enter the income. When you buy something, that's when you enter the expense. Accrual is when you are billed for something, that is when you enter that expense. And when you bill for something, that is when you enter that income. So the way that plays out is like Little Woods, we have some wholesale clients that are, it's our local business friends, right? Like, so like Lockwood Cafe, Morning Bell, Cafe Milo, just recently Farm Grounds, which is super exciting, Dog-Eared Books. They're all local business friends and we sell them tea at a discount. And we also extend terms to them where they don't have to pay right away. So they'll order, I don't know, 10 pounds of tea or whatever, and we'll say, here's your invoice, it's due in 30 days. We enter that on our books when we send that invoice. And then that goes into like accounts receivable, whatever. Anyway, so that's when we enter that income. So something weird that might happen is we'll show an income, say in December, it's not actually going to be received in our bank until January. Now on the flip side, because we carry a lot of inventory, because we're kind of having the same benefit extended to us, we'll order a bunch of stuff from one of our suppliers and they'll extend us net 30 terms. We enter that expense when we receive that bill, even though we're not actually spending the money out of our banking account until it's due. So that's how I understand it. Now, another nuance of bookkeeping is a single entry versus a double entry system. A lot of bookkeeping software is going to default to a double entry system. For my art business, I use a single entry system. I have one spreadsheet, everything gets entered. Double entry is like when you, okay, let me give you an example. This would probably be easier. I'm going to link to a resource for this too. But basically, like when you purchase something, you are deducting money. Like when you're purchasing supplies, like you purchase 10 pounds of yarn, for instance, for your craft pattern business. You are debiting, you're deducting, we'll just say deduct. I feel like it'll be easier since I don't have like a spreadsheet in front of me to show you this. You're deducting money from your checking account, but you're increasing, so you're decreasing your checking account balance, but you're increasing your inventory asset balance. And so it's like a double entry. So like one thing goes down, one thing goes up. And that's the way to think about it. Now, when you're doing cash basis, for me, I've never really needed a double entry system. Because I'm a solopreneur, I don't need to worry about balance sheets. The cash I have is the cash I have. I don't have any debt. I don't have any credit cards for my art business. So like, I look at my checking account and that is essentially like looking at my balance sheet. The only thing I do is I do keep track of like depreciating assets and fixtures, like assets that I might have. I have inventory, but I don't track it. Like I don't track cost of goods sold. I literally just have like supplies are a purchase. They don't get entered as an inventory asset. That might change over time, but so much of my business is like I have a single painting and that's where the value is, and like the inventory asset isn't like 40%. Yeah, it's just, for me, it's just easier to not worry about that. So, and this is the whole thing. It's like you got to do what works for your business, the size of your business. My art business is relatively small and simple compared to Little Woods. Yeah, okay. So the other thing I wanted to cover was accountants versus bookkeepers. So accountants, they go to school, they have certifications, they're licensed to operate in a state. They are current on all things related to like tax code. They save your life if you get into trouble with the IRS. Or like I recently got a letter from workforce development or something like that, and I was like, help, take care of this for me, and they're like, okay, and then I didn't have to worry about it. I use an accountant for my end of year, and I use an accountant for payroll. That's because for me, payroll is like a high stress point. Like I am so afraid of messing that up. And like I just got that letter from workforce development, and I want to be able to like lean into my accountant and be like, you've been doing my payroll, you know how to take care of this, please. Thank you. I don't want to worry about that. Because it's like somebody else's tax situation, financial health and viability is relying on payroll. I really do not want to mess that up. So that's why I use an accountant. Like even though we use QuickBooks Payroll for Little Woods, Weber Accounting oversees it, So like I tell them how many hours people are working, they're still the ones getting in there and doing it. I know I could do it myself. I'm not. It just stresses me out. It's just one of those things. So I let it go. I'm like, you do that. Now a bookkeeper, they could technically run payroll for me, but they can't file your taxes for you. And the big thing is like my accountant actually has, I forgot what it's called, power of attorney when it comes to my taxes and working with the IRS, with the state of Iowa, and that kind of thing. Like I actually signed off power of attorney to them. A bookkeeper, you should not do that. A bookkeeper, they're great at data entry, record keeping, filing, keeping an eye on things. They may, depending on who you get, if they're an independent person in your community, might make sense for them to help you with payroll and that kind of thing, and like getting it submitted. Though I would still recommend you look it over yourself before it like officially goes in, or like I do, use an accounting firm to kind of do like the final submissions and quarterly filings. The big thing is that a bookkeeper can kind of be anybody. It can be you. Like technically I could say I'm a bookkeeper. In my case with Little Woods, it's one of our past employees who, after they got like a salary position at the university, they still wanted to make an extra little income. They still wanted to stay involved with the business. They're a friend. And so they come in every Saturday and they help me with a whole bunch of random like price updates, filing, reconciling, all that kind of jazz, data entry. And that is great because it helps keep me accountable to like getting my bookkeeping for Little Woods done regularly. And it's just a second set of eyes in the business that helps, make sure like if there's any weirdness going on that I don't just glaze over it because I've been looking at it too much, that, stuff might pop to them that hasn't to me. So, like when to hire an accountant versus and a bookkeeper, you might have already gathered this. It's like, well, what's stressing you out in your business? Like what can you afford? A bookkeeper is a lot less expensive than an accountant, but an accountant might actually have an ability to create, I'm going to so go long today. Wow, I really thought I had this down too. Okay, so I'm looking at my outline like where I'm supposed to be, where I am, and I'm like, oh crap, I'm saying way too much again, like usual, but that, whatever. So like a bookkeeper, I would say like at the point where data entry and things like that are either you're blowing it off and it's not getting done at all and you really need help in that area, Or you're getting it all done, but it's at the exclusion of running the other parts of your business that need your attention that only you can do. Anyone can file, right? Like, anyone can help you. You just need to ask them for help. It's easier if you already have somebody like in your business working with you that you can ask for help in this way. There's also bookkeeping services, and they really range in what they can do for you. Some are remote, some are in person, some are firm, some are independent. It really just depends on like what you need and what your situation was. In my case, it really just made sense for my friend to just keep helping me out in this capacity. She really gets to like set her own hours. She comes on site because she wants to. She really doesn't have to. And so like there's a lot of ways that it just made sense for her to be more of like an independent contractor. So she's a independent, like a freelance bookkeeper is now what we would consider her. And that's worked out great for us. I would like to think it's worked out great for her as well. She's still doing it. It's been a couple years, so I'd like to think that's true. She's invaluable to me because like really helps keep me doing this regularly. Now, an accountant, honestly, that was the first person I hired because before I needed help on a monthly basis, I really just needed help at the end of the year when I was filing my taxes. And the thing that an accountant, like an actual CPA, will do for you is they will make sure that your practices are current, help you avoid triggering an audit by just like, you just don't know better kind of scenarios. Any new tax laws, they'll make sure to implement, and they'll also save you as much money as possible. Like they'll look through your books and be like, hey, like one thing she's always like, hey, give me your receipt for paying your insurance. Like give me a copy of, paying your insurance on your cars, like your car registration, and we can write that off too. Like so she knows all the little things that are common to my type of business or my type of household that we should be deducting and writing off, and she'll be able to maximize those savings for us in a way that like I've never had happen with when I've done it myself or when I've done like auto software. So we use her for our personal as well as Little Woods and for my art business and Jason's freelance work. Like it all goes through Weber Accounting here names. They're amazing. So it kind of depends on you. And, like I said, what's stressing you out? Do you have no problem filing your taxes at the end of the year? That's not a stress point for you at all. Do you have no problem doing your month-to-month reconciling and all that kind of jazz? And filing, and all your filing cabinets are neat and tidy with everything where they should be, so you can retrieve the information when you need it. When you do get audited by the IRS, which will probably happen at some point in all of our lives, what do you need? So the other thing I wanted to talk about was bookkeeping software. I kind of joke that this is a little bit of a rant. So for Little Woods, we use QuickBooks online, and that's been pretty great, but inevitably something goes sideways, and it's really annoying to fix. The most recent series of sideways things is that Square decided that they would update their Square Connect app and completely decommission their old Square Connect app, which I don't even remember what it was called. It might just be called like Square for QuickBooks or something like that. And so when we tried to transition over, it generated a whole new series of accounts. It generated all kinds of mess. It started tracking sales tax as a income line instead of like a sales tax liability. It messed up tips. Thankfully, none of this passed through to like payroll. Like we caught everything, so like people are getting paid the amount that they're supposed to be getting paid. But bookkeeping wise, like my profit and loss statement is just a freaking mess. It was a huge headache. I talked to another business who went through the same process. Same thing happened to them too. And I would really consider them like very good at business and bookkeeping and all that kind of jazz. So I was like, okay, so it wasn't just like I messed something up. And I looked in forms and everybody's having a difficult time. We ended up just turning Square Connect off, and now I enter things manually. Like I enter our deposits manually and break it out into that. That's another, I should probably just do a tutorial about how I fix that, because I feel like a lot of people have had an issue with that. So it's good. Is it the best thing? It's the thing that we're using. It's the thing that it will be a pain to switch to something else at this point. It's kind of industry standard, I feel like, in a lot of ways. Now, my art business, this last year, I have gone through a series of trying to figure out what to use for bookkeeping, because I've started to have more expenses and income, and like even just tracking the stuff from the grant I had was really tricky, and it would have been nice to have some automation there. I have a lot of microtransactions because I sell like 30 cat hoodie patterns on Ravelry, and each one of those is like an individual transaction coming through on PayPal. So like, how do I account for that? How do I keep track of that without creating a lot of work? And so I had been using Artwork Archive, which is a archive platform for businesses or for artists, and it's a way you can keep track of like what work you've created, what editions you've done, where it's sold, your list of collectors, you know, what locations your art is at, you know, is pretty good. It had some limitations, and one of the biggest things, they have like a bookkeeping function. It's not good. I'm sorry. Like, it's just, I tried it for almost 2 years. It was so labor intensive to enter a single entry that like, I'm like, this should not take so much time to do bookkeeping. Like, it's too much work. And mostly because like anytime you wanted to enter something, you had to like, there was like a whole series of like multiple Windows steps, drop-down forms, etc. And there was no way to auto import anything. So next I tried Wave, which is supposed to be like free. The other thing too is like craft leftovers in my art business is not generating a large revenue right now, even though there's all these microtransactions. So it's like, I don't want to spend a lot of money on bookkeeping software. So that's the thing, like $30 a month or $40 a month for craft leftovers is quite a lot. And if you don't need to spend it, why spend it, right? There's that too. So next I tried Wave, which is like a free accounting platform. And it was okay, and it could import some transactions from some platforms, like Square, I think, but not from Etsy or not from PayPal, and again, it was like too many steps to enter a single thing. The thing I did like about it was its ability to keep track of like who you'd invoiced. That was really nice. And to generate invoices. So it like looked really professional. It just didn't work out. Like, it felt really awkward, cumbersome. It could be maybe I didn't give it enough time. I don't know. I gave it like a good 3 to 4 months. They also, because it's free, the way it's free is they're constantly advertising to you to like loans, credit cards, other services. No. Okay. So got rid of that. I saw on Skillshare these great series of videos about using Airtable for bookkeeping. And I was like, oh, okay, like Airtable is pretty much like spreadsheets, and that makes sense. I'll try that. And then it was like, Airtable's really great, and I've actually recently converted over to using it for portfolio tracking, for project tracking, for my marketing calendar, keeping track of my contact list. It's been really wonderful, and that'll be a future video about like using Airtable to organize your business guts. But for bookkeeping, yes, you can use spreadsheet functionality in Airtable, but there are just like some basic math things that you can do in a spreadsheet that are really cumbersome and annoying to implement into Airtable. Even things like using equal sum parentheses, to like total up a section. Things that should be super simple. And a lot of Airtable, I mean, it's based on spreadsheets. So like a lot of what you can do with Airtable, if you do a little Googling around and searching for how to link sheets and things, you can actually make that happen in Google Sheets for free. But then you also still preserve all this, like equation math functionality of spreadsheets. So I started thinking about Google Sheets for my spreadsheets, which that's what I usually used when I was doing the like just dump all of my statements into a spreadsheet and categorize it at the end of the year and figure it out and submit that for my taxes. And I'm like, okay, so how can I approach this on a more regular basis? Get some of that benefit that I was getting from Artwork Archive and Wave and QuickBooks and Airtable. Like, I love Airtable's ability to like filter things and group things and that sort of thing, but have it just like in a Google Sheet. And how complex do I really need this? Am I just generating more work for myself because it looks fancy, because it feels organized, or is this kind of like good enough? So yeah, I kind of decided on Google Sheets, which I'll show you in a minute. Now, digital versus paper records. How do I keep that organized? Okay, so like my digital records, they kind of exist where they exist. When I do a monthly reconciling, I do go through and I actually I like download all my bank statements and I keep those in a folder on my computer that's called like 2022 statements. And then when I invoice people, or like when I get a contract or grant stuff, I'll put that as like, or if I get receipts and things like that if I download any of that kind of stuff, I'll put it into a 2022 like income folder, or receipts folder. Really, however it makes sense for you for keeping track of digital things, as long as you can find it when you need it at the end of the year, to submit along like in a packet alongside your taxes. That's kind of the thing. Now physical, it's just like a couple folders. So I have one folder that is basically it almost acts as like an inbox, like to be processed, right? Like you need to go through and enter this. This hasn't been entered yet. And then from there, I have a do now folder, which is like a bills folder that it needs to get paid. Or sometimes it's also like a communication follow-up. We get a lot of like donation requests, and so like it'll go into the like do this now folder. Then there's, for my art business, it's super simple because it's really just receipts, contracts, and like income. And the income can include invoices. It can also include like, a lot of times if I get a check from like a stipend or something like that, it'll have like a big piece of paper that has like almost like a statement, and then it'll have the check, or it'll be like an invoice that somebody has sent to me to go alongside the check that they're sending me. And I'll put that into like an income. So I basically have an income folder, an expense folder, a needs to get paid folder, like an actionable folder, and then I need to look at this and I haven't yet looked at this folder. And that's kind of it for my art business. Sometimes I break it down a little bit more, like when I had the grant, any grant related receipts and things went into the grant folder. But that's more the exception than the rule. And now Little Woods is a lot more complicated. We have a lot more paper that's generated with that, unfortunately, and a lot more records that we have to keep on hand. So we have a folder for like every single supplier. We have folders for all the payroll stuff. Each employee has their own folder. We also have like a folder for all bank related things. So like each bank has a folder. And then we also have like the insurance folders that we've got going on. And then so each supplier essentially has 2 folders. They have a folder that is like their catalog and kind of current year stuff. And then we have the basement set of cabinets, and that's more like every invoice we've ever received from them or packing slips. And the thing is like after 7 years, pitching it. I'm kind of excited because next year is Little Woods' 7-year anniversary, so I will get to start throwing things away. 7 years is kind of the magic number for like anything related to payroll, taxes, etc. Supplier stuff you could discharge sooner if you want to, but it's always good to do a good purge like after 7 years of business, and then every year after that, the oldest box can kind of go. So yeah, for Little Woods, we have 2 huge cabinets in the basement, that have all that supplier stuff and whatever. And then I keep all the payroll, employee records, or anything sensitive business related in a locked cabinet in my office upstairs. So then my art business, I have a single small cabinet, and that is enough for everything. Most of my stuff is online for my art business, and so it's only really those like contracts and incomes and occasional receipts that I need to keep in a filing cabinet. Okay, so then I wanted to make sure to cover that, like digital versus paper records. Now, getting organized. I'm so excited because this is the new thing on the live stream that I figured out how to do. So let's see if it works. I am going to hit, there it is. I did it. I'm so proud. It's a new thing. Old dogs can learn new tricks, etc. 39 years old, live streaming for the first time ever. Okay. So I'm really excited. I made a document for you. There's the craft leftovers bookkeeping books sample. So a few things I really wanted to say. Just again, I'm not a CPA, business legal expert, or any kind of anything. I just own a business. I've had a business of the creative type since I was 17. And these are kind of just like the way I keep track of stuff for my craft and art business. You can use this document. You can share it around. I don't care. If you do share it, just let them know where you got it. That's really it. Like, just be like, oh, I got this off craftleftovers.com. Boom, done. Okay. Now then, I wanted to show you books examples. Oh, actually, no. I wanted to show you the difference of complexity. Okay, so this is my art business. I basically, I'm bouncing all around now. I've got this crazy freedom of sharing my screen. Okay, so first, when I keep track of, I just threw some example stuff and then I made some stuff up. Yeah, Francie, whoops. Okay, so for those of you not looking at this, I spelled fancy with an R, Francie. Okay, so basically what we're looking at, and if you go to the show notes, craftleftovers.com/podcast, you'll be able to find this. This is going to be, I think it's episode 13. That's crazy. And I'm sharing this Google Sheet with you, so you'll be able to look at this after the fact. You can open it up as I'm going through this. The main things for my art business that I really need to make sure to keep track of are, what are my expenses? What are my income? What do I owe sales tax on? Like, that's really important. What's my profit? And who am I getting money from? When did I get it? When am I spending money? And then it comes down to taxes. So like categorizing each of those things, so that way it's easy for me to do my taxes at the end of the year. Now, as an art business, I can write off certain expenses that are then not considered part of my income. So it's kind of like you've got your income, you've got your profit, hopefully right on top. You've got your expenses, and like the profit is what you're going to pay income tax on. So it doesn't matter if you keep the profit in the business or if it passes through to you on your personal income and you've taken it as an owner's draw, you're going to owe income tax. If you're a sole prop or a single entity LLC or even a partnership LLC, you're going to pay income tax on any profit that your business is showing, which is great because that means that, you know, whatever, you made money. But you need to keep track of that. You also need to keep, and so certain categories of expenses get a certain amount of deduction. So for instance, when you travel and you stay at a hotel, you can like write off that hotel expense. You might be able to write off like some of the meal expense. If you are taking a client out to a dinner and you pay for that meal, maybe you take them to, I don't know, whatever, mini golfing, whatever the thing is. I don't know why, I don't even ever go mini golfing, but that just came into my mind. So that's, you know, we're taking our client to dinner and mini golf. You're going to schmooze them, they're going to buy your art. It's a crazy scenario. Anyway, recently, like previously you could deduct up to like, say, I don't know, let's just say it was like 50% of that dinner and golfing outing. Sorry, I'm just like, why mini golf? Whatever. Okay, anyway. That's not the case anymore. It's a lot less, and it's only in certain circumstances. So even though you spent that money out of your business, it's not considered an expense, and it's not gonna like deduct your tax, your income tax liability. It's an odd thing. It's just the way it works. So like, there's deductible expenses like that. There's also like your Little Woods has inventory as an asset line on the business. So like when we purchase things, that's not an expense. It's actually an inventory asset. And so until we sell that thing, we can't claim it against our like as a deduction. There's a lot of nuance there. That is definitely a scenario. Ask your accountant. If you have to have a complex situation of like cost of goods sold versus inventory assets and all that jazz, that's when I do really recommend using a bookkeeping software like something like QuickBooks or I think FreshBooks might have that capacity. I'm not positive. I've not used FreshBooks before, but I've heard good things about it. So then I just had this paranoid thought that I'm like, oh, I'm just talking to myself this whole time, is like muted or something. Okay, anyway, rolling right along. So basically I have my account types. I'm going to see if I can interact with this. Like I said, this is like a whole new world for me. I'm old dog, learning new tricks every day. How do I do this? Don't know. Not the frame. The books. Interact. Hey, all right, I think we got it. Okay, so we have our type here, the field that I like just highlighted. And basically that's just income, asset, equity, owner's draw, pretty simple. And then there's accounts, and those are those different categories that when you fill out your Schedule C at the end of the year, or your, I forget what the form is when you're an LLC, like partnership. Wow, I cannot remember the name of that. Anyway, like I said, I'm not an accountant. When you're filing your taxes at the end of the year, your accountant is going to be like, okay, how much are the totals in these specific categories? And there'll be things like office expenses, printing expenses, bank fees, there's like professional subscriptions. Anyway, I'm going to show you the things. In my art business, these are the things that I keep track of. So purchases of materials, office expenses. Office expenses are things like WordPress, for instance, or Libsyn. Printing, pretty obvious. Anytime I print zines, business cards, whatever, that's printing. Professional memberships. I'm a member of the American Herbalist Guild. I'm a member of the Ames Community Art Council. I'm a member of the Octagon Center of the Arts as a professional artist member, that kind of thing. So those can all get deducted. You should be tracking those. Sales, for me, like I said, sales tax liability is what I'm really interested in knowing. So sales that are happening in Iowa of tangible goods, and I should be charging sales tax, collecting sales tax, and then paying sales tax to the state of Iowa. Interstate sales, I might be liable in some states at this point. I don't believe I'm liable, or I don't think I have liability in other states at this point because of the small number of units I'm selling, and there's like some different thresholds and nuance for each state. But there's like VAT tax and things like that if you're selling in other countries, and that's kind of getting processed through Ravelry. So for me, so and Etsy, I think is doing that now too. So like they're kind of taking care of it for me, so I don't need to worry about tracking it on my books on the income that's actually coming through to me at the end. Then there's wholesale, which is not sales tax liable because they are reselling my goods. So things that fall into sales wholesale are actually like consignment situations where I sell my books on consignment at the Octagon Center for the Arts, right? So when they sell it, they charge sales tax and then they file that sales tax. So when I don't need to then also file sales tax. So it's because they have a resale license. And that's kind of like what that does. So then there's ad revenue. So that's revenue I'm getting from like Google ads. They're so annoying. I've been thinking about just getting rid of them, but it's like the ad revenue is just enough that it covers the cost of paying like for server fees and for WordPress annual subscription. So it's like, it just makes it so Craft Leftovers is kind of paying for itself to exist. So it's hard to let go of that. Anyway, then there's like speaking and teaching fees, which is like a little different. There's commissions, which I'm still going to have sales tax on. But I like to kind of track them differently personally. I want to know like what was someone, what was me selling a thing through like an open studio versus what was me selling something through someone asking me to make a specific thing. So like for me, I just internally want to know that separation. So that's why I put it in there. Bank fees and then grants. Sometimes grants are exempt from income tax, which is different than sales tax. But a lot of times they're not. It's so funny. Like I got $5,000 from the state of Iowa, and then I had to pay back income tax on that grant to the state of Iowa. And I'm like, really, guys? Okay. But thank you. I appreciate the grant. It's really good. But like, it's just kind of funny. Anyway, so that's all I keep track of for my art business. If I was renting my studio, I would also keep track of those payments, but I'm not. Like my studio's in my house and it's a shared use space. There's no defined door or anything. It's just in the basement and in a section of the basement. So like I can't claim it. The other issue too is like Little Woods, we have our offices there, which is also my like commercial, it's also my office for my art business. So I'm already claiming it on Little Woods. I can't claim it again on my art business unless my art business was legit paying rent to Little Woods, which if the art business made more, maybe I would do that, but it's not, so it's fine. Like, yeah, so I'm not going to try to claim the same space for two businesses. That's shady. Like, yeah, don't do that. You're going to get in trouble. Okay, so that is what I do for my art business, like craft leftovers and such. Now, this is where it gets a little complicated. This is what I do for Little Woods. This is the chart of accounts from, this is maybe a little bit more intimidating too, sorry. This is the chart of accounts for Little Woods, and this is also why I have an accountant. They help me set this up. They help me monitor it. If I run into an issue, I'm like, Amy, help! Because it is complicated. And so basically I have a series of account classes and then the accounts and then sometimes even sub-accounts. So like, let's look at advertising here. Advertising is an expense. It's considered, it's an expense type. It's the account class is advertising / promotional, and then the account name is actually advertising. And then under advertising, I have sub-accounts of different types of advertising, because when I pull up a profit and loss statement, I want it to show up how much I've spent in each of these places. So like newsletter services, that's like Gmail, MailChimp, Square Marketing. Those are all newsletter services that we pay for Little Woods. And that allows us to, email people who want to hear from us. And send them, coupons and updates and all kinds of exciting stuff like that. Hopefully not annoy them too much. We really try not to annoy you guys with our emails, I promise. So then there's things like bank charges, and that's kind of the same thing. I want to see overall how much my business is spending on bank charges. Oh, yeah, so the interaction thing is not quite exactly working well. Okay, so, but then I also want to see how much fees am I spending on each of these things. So like we have a lot of different places we're getting incomes, like Cratejoy, eBay, Etsy, Faire. Some stuff comes through PayPal, QuickBooks, invoicing, Square, Stripe is what is the payment processor on our website. And so like I want to see that overall number as well as how it's broken down in all these sub accounts. So like, oh man, let's just look at this real quick. Yeah. So that's, and it's because it's accrual based, and it's also, it's a more complex business. It's 10 times as much revenue and expense as what my art business is seeing. Like Little Woods is over $200,000 in annual revenue. My art business is more around like 20,000. Interesting thing though is, I don't know, my art business, it has a lot less expense. We don't have to hold all this inventory, or I don't have to hold all this inventory. I don't have any employees. I don't pay rent. It's pretty nimble. So it's definitely, like some months I'm like, oh, my art business is more profitable this month. So like that revenue number does not matter as much as that profit number. Okay, so then, yeah, going back to this books example, the other things I want to keep track of is, I don't know if any of you all are old enough to ever used a checkbook in your life. I learned how to use a checkbook in high school, actually before that from my mom, but like we officially went over it in high school. I remember that it was part of like you're going to be an adult soon. Here's some help for figuring it out. And basically you take your bank statements and you reconcile it. And what that means is you look at what is in your books. So like, whoa. I apparently turned that off. Okay. So like what's in your books versus what is in your bank statement. So like that would allow you to see outstanding checks, outstanding invoices, like clients that you've billed and not received yet. And any like things that you missed, like maybe you forgot to enter a thing that came through. Now, what my process is, each month I go through, I download my PayPal transactions, which is what most everything goes through, and my checking account statement. And I literally like 1990s style, just because my bookkeeping is so simple for my art business. So, like, I don't need anything more complicated than this. And I literally will just like check box that reconcile column there. I will check it and I will physically check mark it on the statement paper of like, yes, that transaction is showing up there, it's showing up here, we're good. And then I'll also go through and I'll categorize them into those different account types. So that way at the end of the year, I literally can just sort based on that account type and do some quick totaling, and I can give my accountant exactly what she needs to do my books for, or to file my taxes. And it's super simple. And kind of the same thing is that, like, because I don't hit a certain threshold, I only have to pay sales tax once a year versus Little Woods, which we have to pay every month. So any sales tax I've collected, I can then see that total number super easy because I just kind of break it out. Now, another thing you can actually claim as a small business is sales tax you've paid for the things that you're reselling. So, like, you have a resale license, you have a retail sales tax ID. So, like, say, for instance, I go to Lowe's and I buy a bunch of lumber that I'm going to build into frames, or that I built, like, the pedestal for the art piece I just did out of. I got charged sales tax because I don't have a wholesale account with them. I don't have a business tax exemption with them. So I went ahead and just paid the sales tax. It's fine. But when I go to pay sales tax at the end of the year for the sales tax I've collected, I can actually deduct the amount of sales tax that I've already paid out to businesses. And so it can reduce how much sales tax you're having to pay. It's worthwhile to keep track of. Now, if you do that, though, only do that for things you have receipts of, because, you know, state of Iowa might be like, hey, did you actually buy these things? Did you actually use them for resale? And you need to be able to back that up. The other thing I want to keep track of is, like, projects. So, like, past this memo field, I actually have a project field. And so, like, I kind of put a joke item on there called Fancy Grant. So, like, any expenses related to that fancy grant, and if that grant is related to, like, say, a very specific project, I would group all those together just because I want to be able to pull, like, how much did I actually spend? Now, in addition to kind of tracking and reconciling, like, what you have coming in and out as cash from your bank, there's also that equity, right? And your owner's draw, because this is gonna owner's draw affects your checking account balance for your business. It doesn't affect your profit when you're a sole prop, because it just passes through to you. So, but I kind of still want to keep track of how much I'm intentionally paying myself each year. So on the type here, there's actually I don't know if I can do this. No, it's not that. It's not going to let me interact that well. Okay, so on the account type, the type, this column here, on the just type, not account name, there's going to be equity. So when I purchase something for the business, the account might be all kinds of different things, right? Like, maybe I purchase a sewing machine. Maybe I purchase 1,500 infusers. Maybe I pay for Dropbox every year from my personal income just because I originally set it up like that 20 years ago and I just haven't changed the credit card over. Whatever the thing might be, that can be different. So Dropbox would be office. Buying the sewing machine would be a purchase, like an equipment purchase. Buying infusers would be, in the case of Little Woods, it's a cost of goods sold. In the case of my art business, it would just be like general purchase, whatever. But the type would actually be equity. And then that allows me to sort and to see how much money I've put into my business over a month, over a year. And that number does affect that profit loss number that you're seeing kind of in the upper right hand corner there, because it'll show up as a debit, as a negative on my general business ledger. Now then, the other thing is equity is also owner's draw. So like you're going to draw money out, and that's also, it's reducing the equity you have in the business. And so like, honestly, the thing is I'm not sure, it doesn't apply so much to a sole prop, or it's more like I just want to know, like I want to see it on my balance sheet. I want to see it on my books. It's not, when I take money out for like an owner's draw, it doesn't affect my tax liability at the end of the year. It doesn't reduce or increase my tax liability. For me, it's just more like a differentiation of like how, like I want to track how much money I've pulled out of the business to pay myself or to do like a profit dispersal, and that kind of thing. And that's called owner's draw. And so the type again would be like, it would be kind of passing through the equity account, but the account would be owner's draw. That's how I understand it. That could be wrong. If you know different, you can get snarky with me about it in the comments, and I'll be like, oh, my bad, you're right. But again, like, I'm not an accountant. This is just how I keep things organized for my own personal, small, creative business. It's not necessarily like the best way or the way that'll work for you. The main point is you got to do what works for you. Make sure you're checking in on things regularly, because it can actually be fun. Like once you get all this information in there, you can see how much have I paid myself, how much materials have I purchased, how much money have I made. Those are all really great, inspiring, motivating numbers to have. They don't have to be scary. They just are what they are. They're not good or bad. Even if your business isn't showing a profit, for short periods of time, that just might be what the best thing for you and your family and your situation is. Or it could be a good place to check in and be like, I need to fix this. And that's also good to get those reminders. Now, some fun things you can do with your records are you can evaluate your profit. Ooh, hopefully you have a lot. You can also look at your growth. So I really like looking at I love it when cost of goods go down and revenue goes up, but especially if like that profit goes up. I actually like to see when I'm paying out more in payroll, because that means the business is thriving and I'm like able to better support the people who are supporting the business. And that's really cool. You can also do things like track your assets. Like you can track like how much all this really cool creative equipment and things are worth, like the camera, the computer, the sweet old sewing machine. All that stuff adds up, and those are all your assets, and that actually is part of your net worth. And your net worth is like, your car that you own and all that kind of jazz. And it's not like it's not like the important number. It's kind of just a fun number, and it's like a metric where you can gauge, where it can get a sense of growth, of that you're building something. And even if it's just like you're going from owning an $8,000 truck to owning an $8,000 truck and a $50 sewing machine, like whatever, it's growth, it's building. That's cool. It feels good. It's just like another way to show that you're accomplishing something in your business. It doesn't have to be a negative. Like I think a lot of people talk about net worth and they like see it as like some fat cat billionaire being a total jerk. It can also like it can give you a sense of building towards your future and building financial security for you and your family. And like that feels good. Like I grew up in a blue collar family. I grew up like in not the best financial. I mean, we did our best. My parents did their best, but like money is not bad. What people do with money is good or bad, right? Like, so, and especially like in your business, like, why are you in business if it's not about making some money? So there's easier ways to make money too than having your own business. Anyway, so then there's also like debt payoff. So like kind of that same thing. Like after we had Lucy, we had so much debt. It was crippling. So I made it and it felt like it was not going anywhere. Like it felt so overwhelming. Oh my gosh. And so I made a spreadsheet. And at the beginning, I had the beginning debt balance, which was a huge, scary number of medical debt, credit card debt, student loans, mortgage, loan from family. It was a crazy number. And every month we paid it as much as we could. And, you know, every month a little bit came off. And now on the other side of that is a nice 0. And I made it big and it says how much debt I've paid off. Huge. It's like, it feels really good. And when you're paying off a huge amount of money, whether it's a student loan, a mortgage, medical bills, credit card debt, it can be so overwhelming. And so to like, not just see that number get smaller, it's such a big number, it's not going to feel like it's getting smaller. To see how much you've paid off, that you've put a sizable effort into paying that off, and that it's showing progress of like that it's getting smaller and smaller and smaller. That feels so good. And then on the reverse end of that, once you get out of that debt tunnel, to have it be expansive and seeing those assets stack and grow and build up over time, that feels really good too. So that's one of the fun things you can do with your bookkeeping. Anyway, and then, looking at your income strategy. So I actually like to make a pie chart. I add up all my different income sources. It's like another stats thing that I do where I track like how much income I'm getting from my different ventures. Like, so craft leftovers versus my art versus wholesale commissions versus speaking fees versus like Little Woods income. And I have this big pie chart so I can kind of see how things are shifting around throughout the year, that sometimes Little Woods is the biggest, sometimes my art, sometimes craft leftovers. And that's kind of fun to see how, my income strategy for my creative businesses. So that's like kind of another thing that you can do when you're keeping your books up regularly. So yeah, I've gone super over, but I feel like this topic is worth it. And I hope that something I have said today is helpful, is something that emboldens you to take charge of your books, to not be afraid of them, to get curious about them. Like dig around in there like a fact-finding mission. It's really interesting what you'll find in your own spending and income habits. And also, like, if you need help, get help. Like, there's free workshops and resources to help with taxes and that kind of thing. You can also, find a mentor in your community, a business owner that you respect and admire, and ask them for their help. A lot of times they will say yes. Sometimes, they won't be available, and that's okay. But like, honestly, I opened up my books to one of my neighbors, the owner of Duckworth Wearing and The Loft Clothing, their consignment shops. And I asked him early on, he offered. He said, because I was like, oh, I'm really struggling. Like, I just don't know where to take the business next. Like, what do I need to do? I feel like I'm just not able to really make a profit. I don't know what's wrong. And so he's like, I can come look at things. And he did, and he gave me some really great advice. He was like, you can either work more in your business and have less employees, or you can make more money. So I was like, I'm going to make more money. And I actually chose to work some more in my, like, as some people just naturally transitioned to different jobs, I actually chose to work more in the business. So it was a little bit of a half of this and half of that. And it's worked out really great. So yeah, thanks for sticking with me if you've watched this whole crazy thing. And I think I finally said everything I want to say about this for right now. Then I have ideas to show you all about what I'm doing in Airtable and that kind of thing. But that is another day. If you have comments after this airs, if you've watched this and you have some questions for me, absolutely feel free to just drop a comment. I'll do my best to answer or to direct you to a good resource for an answer. Don't forget to like, subscribe, leave a comment, share, submit a review. If this ever goes onto a podcast, it will absolutely go onto a podcast.